Hey, this is Neil Bawa, the mad scientist of multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. I am your host, Bronson Hill. I'm here with my co-host, Nate Hambrick, who is the master of leveraging other investments, time, energy, all those things. And Nate, I wanted to actually get your take on this. I know one of the challenges of real estate is that sometimes it is illiquid, which can be a positive because, you don't panic sell like people do with stocks, but sometimes it can take years before people start seeing cash or they can sell. How do you see liquidity when it comes to investing?
Yeah, I mean that's always been the challenge is you want all of your money to be working for you, but if you put 100% of your money in the market working for you and then something happens, you're kind of hosed to some extent. And so what I'm
Be top
excited
ramen for 5 years until you get it back, right?
yeah, there you go. A promise of a profit in 5 years is not the same as cash in hand today.
Exactly.
And so, what I'm excited about to chat with Tyler is I know he's in the tokenization space within syndicated real estate. And although there's a lot to be figured out, I'm very, very bullish and hopeful that one day it will be a lot easier for the everyday man and woman to buy and sell real estate and have more liquidity.
Awesome. Yeah. So we have become a good friend here. Tyler Vinson is the CEO of RETokens, which is a platform pioneering real estate tokenization. If you're not familiar with tokenization, this has been talked about over the years. I actually emceed a conference a few years ago called the Blockchain Real Estate Summit. So basically, the idea of tokenization using blockchain technology, you can basically the benefit is you can buy and sell much easier from an illiquid security like a syndication, right? Or something that's not, it's harder to get in and out of. And there are secondary markets to sell things. It's just very difficult. But what if you could invest and then 2 years down the road, you decide, hey, I want to get out of this and go to something else? Well, you actually have a way to be able to do that. So, Tyler, good to see you, brother. Always love what you hear about what you're working on. And why don't you give us a little bit of history on tokenization and just kind of like, I know there's been a lot of regulatory stuff and you're working through some of it now, but talk to us about, I feel like it's always just kind of been right around the corner, but it sounds like you're like right on the cusp, like just like we can see the finish line. But talk to us about kind of this process and who this is helpful for to have the ability to tokenize real estate.
Yeah, absolutely. First of all, I just want to say thanks for having me, guys. Bronson, as you mentioned, known each other for quite a while and always fascinated by all the awesome things you do for investors and the real estate community. So excited to be here. Yeah, tokenization and the capital markets that we're talking about is not as far off as people might think. In fact, they are here right now. I would actually argue that we've turned that corner. In fact, we became a FINRA member and are one of the few licensed, FINRA licensed digital broker dealer and ATSs, and that ATS is that secondary marketplace. So just real quick for some of those that are not, real familiar with tokenization, I think it's so easy to get caught up in the hype of the technology and the jargon and the buzzwords like what's tokenization, what's blockchain, how does all that work, and it gets real easy to get lost there. So I like to just kind of back up for those that aren't familiar and just say what is tokenization, like what does that actually even mean? And it's simply just making the ownership of the asset digital. So when we do syndications, and investors buy into that or we sell equity, it's normally like LLC membership units that we're
Right.
selling to raise the equity, or people call them shares. Well, when we make those digital, that's what tokenization is. And so some of the benefits there are, as you mentioned, there's pathways to liquidity for it, right? And so now where real estate has been an illiquid asset, and especially LP and GP shares of syndications and private investment have really been illiquid or extremely difficult to sell. We're changing that because why shouldn't those assets trade like stocks or more recently crypto? And the other thing is the compliance complexities. Part of what we do is make them less complex and streamline those. So instead of having all these middlemen and timeframes and everything, you're getting things done with a few clicks of the button. So it adds a lot of efficiency and then really access for both sides. Investors have much larger access to deals, and syndicators have much larger investor pool to be able to raise capital from. And so those digital rails are what makes tokenization so attractive.
Well, it's interesting too with the idea of liquidity. So, obviously people pay. It's interesting if you have a private company that's not real estate, but a private business, and might sell for 3 to 5 times earnings if it's a local business. But if because it's illiquid, it's harder to buy and sell these, whatever. But if you had shares of that business and it was a larger business, it would a lot of times trade for a much higher multiple, and liquidity can provide that. And that's something that I think is really interesting for real estate operators or investors to be involved in tokenized deals on the front end, because maybe it's something that sells at one sort of multiple, but then when it's liquid and people can buy and sell, there's this whole new market that opens up, and all of a sudden you've got like a much higher multiple that people are willing to get into. I guess a question from that is if things do become, because the whole goal is liquidity, right? It becomes more liquid. What sort of time do people have to wait? Is it still 1 year and you've got to be accredited, and there's some guidelines? Can you talk about some of the guidelines around when people can buy and sell? And it's not just they can come in and out all the time, but there's limits on how much they can trade.
Yeah, that's a great question. And just bear with me because it does take a little bit of explanation. We have to get into some securities exemptions and stuff like that. So normally when you do a syndication, we'll just call it a Reg D 506C, where you're out there marketing the deal, you're raising capital from different investors, and they typically have to be accredited investors to participate, right?
Right.
So when you open up a secondary marketplace like what we're talking about, they don't have to be accredited to invest in that secondary marketplace. However, it requires an exemption. And so like on that primary raise that we talk about, a Reg D 506C being the exemption to resell on that secondary market, the exemption used is something called Rule 144. And as part of Rule 144, to be able to sell on a secondary market to non-accredited investors, you're exactly right, Bronson. There's a 12-month lockup period for that in that particular exemption. We are seeing a lot more Reg A plus Tier 2 starting to come into the space, and that's just a different exemption for a capital raise, a more intense exemption, but that does allow you to go straight to the ATS, or what we're calling the secondary market. Bottom line, allows you to raise from non-accredited investors from the get-go, and I think more importantly, allows access for those non-accredited investors to get into some of these deals that they've been locked out of.
Yeah, exactly. Okay, so it basically allows people to come in, and obviously with these exemptions, they don't even have to be accredited, which is great. And then did you say they can buy and sell whenever they want, or there's limits on how much they can buy and sell?
No, there's no limits on it. So just kind of bear with me as I lay some foundation here. When you trade in the stock market or like on Coinbase, there's typically a market maker in the middle, or there's an order book style. If there's a market maker in the middle, you're not actually buying and selling with another party. You're doing business with the middleman. Well, this is early innings for this marketplace, so it's going to be what we call an order book. So the buyers will actually purchase from the sellers and vice versa. So if you're going to list a token for sale, whether you're a GP or an LP, right, and we'll say the deal is approved to be listed on the marketplace, you'll be able to list it on the marketplace and put an ask price on what you're willing to sell it for. And when you have that on there, and there's all sorts of information for the investors to look at and assess the deal, but they can just click a couple of buttons, assuming they have an account on the site, and it will settle right then and there. And the ecosystem that's hooked up, I'm happy to explain it if you want, but bottom line is what happens is when you say, hey, I'll sell this token for $1,000, and somebody says, hey, I'll buy that token for $1,000, you get it. The transaction just happens pretty immediately, and now you have the dollars, the fiat, and they have the real estate token, and that's how the transaction works.
This is fascinating. I mean, this opens up so many doors. You have no idea how many friends over the years have wanted to invest in these kinds of syndicated real estate, oil and gas, that just couldn't, or they had to have their wealthy uncle start an LLC or something like that. So I'm curious if you have any insights on how you think that's going to change the investing market. Because I'd imagine if we go from, for the most part, only accredited investors investing in these kinds of deals to, hey, everybody, right? Invest your $10, over here and your $20 over here. I'd imagine, first of all, there's going to be a messy middle as we figure this out, but I'd also imagine the way that we market these products will change, the way that we buy these products will change. What are some of your insights on the way that you think investing in real estate will change as tokenization becomes more of a thing?
Yeah, there's a lot there, so I'll keep it short, and then we can deep dive if you want. But one of the things is just excellent ability for diversification for the investors to be able to get involved where normally they've been locked out of those. And what I see changing is the entire financial asset industry, capital markets, everything. It's all digital. It's all a digital ecosystem. So you will have different digital currencies. We kind of see that with Bitcoin now and USDC and how all of that's going. And you've even seen BlackRock and now Robinhood and even NASDAQ. They all have everything being tokenized, everything. And so this is a chance for real estate to participate in that digital era, and being able to fractionalize it and actually trade this way has really not been something that's present for real estate. So one of the biggest things when I talk to our clients that are tokenizing is I say, let's just not talk about the primary raise, the initial capital raise, right? Because I feel like the more waterfalls you had, the bigger flex it was, and some of these complications it would be. But that can be difficult to trade on a secondary marketplace, right? So this is about scaling your brand as a syndicator. You want people to see Bronson Equity as an example, and there'll be several offerings or token offerings under that, and they know that brand, and it's easy to see. But if it's overcomplicated, they're going to have a tough time choosing between those. So when I talk to a syndicator, to your point, what's going to change? We're going to be thinking about how people will trade this for potentially decades to come on some of these legacy properties versus, hey, we're going to be in and out of this within 5 years if we can. A very short-term thought, because now as syndicators, we normally are under a little bit of pressure to either sell the asset or do a cash out refi so that we can get our big payday as syndicators, but so our investors can realize their investment. And now that is no longer an issue, as they will be able to come and go as they please. And as we round this corner, what's coming for the future of real estate and real estate investment is a world where they can actually get loans. This is where we call the DeFi world comes in. They'll get loans against these real estate security tokens that do not jeopardize the title of the real estate at all. So the LPs or GPs don't even have to sell their real estate tokens.
Wow.
They will actually be able to get loans on these private shares. And that's a big part of the ecosystem and the conversations that we're having that are actually brewing behind the scenes right now. And that will be significant.
That's huge. Yeah. Cause I know with stocks, you can do that, right? I know people that are, worth 10 million and they can borrow against that for a small amount. They get it. And it's just kind of like they can borrow up to 75% or whatever the amount is loan to value, and they get it. And it's like a HELOC kind of thing on their stocks. But to be able to do that with real estate that you own with shares, I think that's really amazing. I mean, that's going to open it up for a lot of people. What are the costs of setting this up, like right now? Like let's say we started a new business, we're doing modular home development, single family home development in Altadena, California, where the fires were. We're going to bring in homes that they build in a factory and put them on trucks and bring them out and do it. So if we do that and we tokenize this and we put it all together with a multi thing, and we're able to, like, what is the cost to do that now? And do you think that cost will go down? What will it become, I guess?
Yeah, most of the cost is in regards to compliance. I mean, that's one thing that we need to keep in mind. Well, two things to keep in mind. Number one is, as exciting as all this is that we're talking about, it's still fundamentally real estate underneath, right? You need a great operator, you need a great project, like you're talking about. And the other thing is that these are securities. So you really want to make sure that you're compliant in all of this. And so the first thing is going to be whatever your legal fees are. And I think those are coming down. not from tokenization per se, but mostly because of AI is what we're seeing in this space. And so we've negotiated with a couple of different digital asset securities attorneys to bring that legal barrier down. So depending on if we're talking again a Reg D 506C and you're going to do the raise that you described, Bronson, you're probably looking in between $10,000 and $15,000 in legal to get that up and running. Once we have the legal, that's where we can mint these tokens and do the tokenization. So, but as a broker dealer, there's a full due diligence and compliance piece and reporting and all that we need to do, plus all the software with that has the cap tables and the trading and the integrations of the transfer agent and the custodian and all of this stuff put together. So for that whole system and to do the tokenization for the software, the whole 9 yards, it's going to be about $25,000 for an engagement fee with a SEC registered broker dealer, like let's say RETokens, for example. And so that's where if you're, a raise that's maybe a couple million or less, those are probably more substantial financial barriers to get in because these are investments that we're working in. But if you're going to raise several $1,000,000 or more, then those are actually fairly normal costs that people pay to get into that. And then we as a broker dealer, by the way, I'm not soliciting any business or anything. This is for educational purposes. But we as a broker dealer can participate in that capital raise. And if we do that, then there's success fees. But on the secondary market, same thing. There's a listing fee. It's probably about 50 or 60% of that engagement fee. And then very small transactional fees on the secondary market when people buy and sell that. So that's kind of what that looks like.
Is this something you see, like people are going to be able to do this with other types of assets, such as oil and gas or buying businesses or things like that, that you wouldn't necessarily go public with a business, but you could tokenize it way cheaper? Because I know going public is like a huge thing and it takes time. And of course, you got to be listed on it. But it's kind of a way for small companies or other types of businesses to go public, like to kind of go public as well without the cost.
Yeah, no, we are seeing it. In fact, real estate is actually behind the game compared to like private companies, and definitely I'm familiar with oil and gas groups that tokenize and do all of that. In fact, we've turned down a lot of those opportunities because we believe very much in the real estate space. There's, real estate and Main Street is very different from Wall Street, right? And I think one of the biggest problems with some of the other platforms that are out there that you can buy tokenized assets, like let's say T0 Securitize, is they're generalist platforms. If you get on there, like, what are you buying? What are you looking at? How do you analyze it? Where we want to be a marketplace for only real estate or real estate debt. So when you go to the RETokens marketplace, you're looking at a real estate investment and you're going to invest in real estate. So yes, those are already there. And that's why we've decided to remain only in the real estate space and be number one in the real estate space, because from a use case perspective, we actually believe real estate has some of the greatest benefit from having digital ownership and getting to participate in this compared to some of the other popular categories that already have electronic settlement and fractionalization and some of those things. So yeah, it's out there.
And it sounds like it sounds like this will solve my biggest frustration with commercial real estate, which is the waste, right? Because if you're flipping an asset every 2 to 5 years, there's so much waste involved with that, right? From depending on what kind of asset is, right? Brokerage fees, licenses, due diligence, all the cost to acquire the capital. There is just a colossal amount of waste when you think about it from having to flip the asset every 2 to 5 years. And so it sounds like this will solve a lot of that, because if people can hold the asset for 30 years or 50 years and then it just the tokens switch hands 10, 20 times, you don't have to go through all the paperwork and the hassle and the chronic waste. So I'm loving what I'm hearing. But I'm curious, Tyler, what are the biggest roadblocks to this, or what are the biggest challenges that you're having to overcome? And with that, when do you think this will become mainstream?
Yeah, so as far as the biggest roadblocks has really simply been education. right? Is letting people understand that this is available right now, today. And there is going to be an adoption curve, and that's kind of the biggest wrestling match. I actually think the easiest part will, there's a huge pent up appetite of retail investors, and a lot of platforms. I get into liquidity and how that's going to work and who all is going to be in the marketplace. But there's just a massive pent up demand for the retail buyer to gain access to this type of real estate. And when do I think it's happening? Right now, there's billions of dollars of tokenized real estate on chain, but there are no marketplaces exclusively dedicated to tokenized real estate. And that's what we've set out to change here. So as mentioned at the top of the show here, we've got a couple of projects, really a few projects right now going through legal, and we intend to launch the secondary marketplace in Q4 2025. We'll have all of our licensing dialed up. We have the platforms, we have everything. It's just making sure that when we launch, there's a little bit of choice for the investor out there. Because when you're creating the marketplace, you want to create something that people are coming back to. So one of our big focal points over the next 12 months will be the seasoned securities that are already out there, the Reg D 506Cs that are already 12 months old. They've already raised the primary, and now they have a loan due that they're not excited about, or they've got LPs that want liquidity, or they want to recapitalize themselves. But taking these, they can go straight to the ATS, very small legal disclosure put in place, very easy to mint those tokens, get that digital ownership. And there's hundreds of billions of dollars of these seasoned real estate securities that can come participate in the marketplace today, and pent up demand wanting to participate in those deals. So I really think that we'll get trades as soon as Q4 2025. And I think that we'll see a lot of momentum in 2026. And by this time next year, I think we'll really start hitting that adoption curve. But most people don't know that you can actually get into somebody's deal like this because they haven't been able to before. And then on the syndicator side, that there is an SEC registered marketplace, a compliant way to get out there and be able to sell these shares for the GPs and the LPs that are involved in their deals as well.
So I guess a question I have for somebody, obviously people may have been hearing this chatter for a long time as far as tokenization and what it looks like, but where do you see all this heading? Do you think that eventually, I mean, one issue we've had as syndicators is that we haven't wanted to take, small amounts of money, because if you have, 100K is one thing as an investor, but if you're taking $100, you might have literally, it's like the crowdfunding. We haven't done it because, first of all, great operator limits we haven't really seen it to be necessary. But if you have thousands of investors, whereas before maybe you had 50, it's just really hard to give great service. So how do you foresee kind of the service side of this? And then also, I guess, if I own, shares in a token of shares of a token of a certain investment, I guess it's just a lot more paperwork, and they've got to kind of like send it all out, and it has to do with, tax benefits or cash flow, or I guess they become kind of like dividends or whatever from a deal if there's cash in the deal. But can you talk a little bit about the logistics of and the future of how it goes when you have many, many, many investors in one deal?
Yeah, I'll answer the second one and then go to the first one. The second one, that's the beauty of the technology and the blockchain and this whole Web3 integration that we've done, is there isn't that big paperwork push or any of that, right? There's these things called custodial accounts, or people call them wallets, right? And they're all hooked up together. So when somebody clicks yes on your e-sign for your subscription and wants to invest in their wallet is going to trade, and you're going to get the fiat, and they're going to get their asset, or they're going to use Bitcoin, because you can do that, or USDC. They can off ramp from crypto right into this real estate token. It will make the conversion so you don't have to take the crypto, but that's all streamlined. You don't have this big paperwork push. And the transfer agent who monitors who owns what, like when you get into secondary trading especially, is in real time. And that cap table is all part of the technology in real time. So you can access it. You don't have to keep track of all. That's why you use a broker dealer, and that's why you employ the type of technology in there. Is the whole thing is streamlined and happens with a lot of automation and happens fairly instantly. So that's the first part. The second part, when you come to thousands of investors in service, oh boy, do I hear you there. But think about this. Like, if somebody's unhappy with the Amazon package, do they get to call Jeff Bezos? You know, they don't, right? And so you will provide whatever service level you want, but with thousands of investors, you're communicating in a much broader way. So I know as a syndicator, and you probably do too, I do quarterly meetings and things like that. And I'll open it up for Q&A, but I don't get to everybody's questions necessarily. There's also AI now. And so, for example, in our platform, we've got AI agents that are custom trained on your deal, your brand, your offering, all the compliance, all the legal, everything. So prospective investors, as well as current investors, can ask very direct questions, robust questions, 24/7, 365, Christmas morning, and get the answer that you want delivered in your voice, your brand, with your compliance, without any of your staffing. And so it's really leaning on the technology and choosing how you want to, you know, communicate with this group. Because I get it. I've raised millions of dollars as a syndicator. That's my life as well. And it's lunch meetings and one-on-ones and all of these types of things. And you may choose to do that with somebody that's going to invest $1 million with you still, right? But it's perfectly appropriate in this world to communicate in a general platform through announcements, meetings, newsletters, exactly how all of the stock market companies communicate, exactly how all the large crypto companies communicate, and that's the service level. So fortunately, technology picks up some of that slack when it comes to dealing with prospects. And because of all of the automation and the technology's ability to track all the investors and everything that's going on, you don't have the same, really what they were headaches having to deal with so many people. They just invest online. You're not trying to chase down a cashier's check or a wire. It's all connected. They're just clicking a couple buttons and it's in your account.
Yeah, that's amazing. Yeah, I remember we've had investors that would want to, they'd have like a retirement account, and for a while they'd want paper checks. And eventually we just said that we would only want to allow it because the paper check would be sent and then it would be lost. And then it would be, so like the more you can automate all this stuff, the better. And like you're saying with AI, I mean, a lot of this stuff can potentially be automated, which I think is super valuable. So I really love it, man. Well, I think this is great. And you said the Q4, you guys are right there on, and you guys are basically the first ones doing this. You're really innovating in the space. And once this is set up, then we can say, hey, we're gonna, put this deal up on RETokens, and it gives additional liquidity, and then people can buy and sell. And then even as operators, we can be able to get more liquidity there as well. So really the benefits are liquidity, flexibility, timing, and then of course people can come in always later if they want to come in later. It's like, oh, I missed the offering. Well, you actually get in and somebody wants to sell, or maybe can people just kind of list their stuff and they can take a certain offer people want to sell, but they don't have to sell. It's just kind of like you have stuff almost like you like post like on Craigslist or something, right? Oh, I've got these shares, and if people want to buy it, they'll jump in. Is that part of it, or is it more kind of like a listed price for certain items?
Yeah, that's a really great question. So let's just quickly walk through that. In the early days, there's not a market maker in the middle that you're doing that with. So it is an ask from the seller. So it's not anybody can just list anything. As a broker dealer, as a SEC registered platform, we're going to underwrite this. It's our job to create that compliant environment, safety for investors and things like that, which is a huge benefit to the syndicators. So that's the first thing, is we got to approve that listing. But once that listing is approved, the GP and all the LPs, anybody holding those real estate tokens in that deal, can go ahead and list it. And yes, they'll list at, an ask price. Now, as part of that exemption, we have all the public facing information required that will mirror for each seller that is provided by the sponsor, the issuer in the first place, right? And like your quarterly updates, your financials and all that will be required to be listed. So an investor knows what they're looking at, right? And if somebody has an ask price on there, they know if I invest this, this is what my, return would be. And of course, the software can assist them in doing that. So they will be able to list. There's also the buyer side in a bid price. So a buyer could come see the listings there and say, I think that the real estate market's going to go up or down, or I think interest rates are going to go up or down and it's going to affect it. So they could put some bids there. And as a seller, somebody that holds those tokens could see that bid and choose to sell at that price. And that's when instantly the matchmaking is done and the whole, system works. So it will be that order book style where a seller is going to work directly with the buyer, and all the ecosystem is set up to do that automatically. But I do see in the future a market maker coming in, which has its pros and cons, because when you're selling buyer seller direct, there's not a spread. But when there's a market maker, if you buy on NASDAQ, you buy on Coinbase or something, there's a market maker that takes a little bit of a spread. And if you got high volume, that's okay. But if there's low volume, each person needs to take a look at what their actual return is going to be, and go from there. But I think there is going to be a delta though from the original primary raise and the accredited investors that have to get on the 506c to when they're able to sell to non-accredited, who are willing to take a lower return, not because they're less sophisticated or less able, but because they have less access, right? So to where accredited investors need certain returns because of certain things, non-accredited investors, if they could, I'm just going to make up some numbers, if they could get, a 5% cash on cash return with K1 tax benefits, and when the NOI goes up, their token goes up too, where do I line up and get involved with that? They're excited to do it. And then they can learn from your project and maybe become a Bronson Hill one day.
Yeah, absolutely. I think that's wonderful. I think it's really great to be able to add liquidity to things. I mean, I think that it's interesting. It kind of reminds me a little bit of this is a little bit unrelated, but where now you can basically bet on anything, right? Like, when is a sporting event going to happen, or how is a player going to do? Are they going to be over under a certain amount? But now it's like you can bet on political things, like what's the length of this speech going to be, or there's things, maybe that's a little bit extreme, but there are things you can bet on now in our culture. And it's not that we're betting with some of these things, but just the idea of having liquidity and being able to put money into things and being able to diversify more, it just gives you more flexibility. And I think it's great, as long as this, I think, can stay off of Wall Street. I think I'm biased. It could just be, I think you are as well, where it's like Wall Street just finds a way to just really screw people a lot of times. And so if you can, kind of find a way to keep it outside of Wall Street, it's so much better, because it's just, there's more transparency, there's more things that can happen. I guess one last question I have, and I don't know if Nate, maybe you have another question too, but just the idea of transparency. Eventually you're going to have this, platform's got all these things on there, kind of almost like a crowdfunding site, but it's the way things are transferred obviously is very different. But how do you keep transparency? Do you think there'll be additional regulations that will come in place in the future? I know you have to be a broker dealer to kind of be doing what you guys are doing on the exchange side, but do you think there'll be additional kind of regulation that comes in the future?
Yeah, I think the regulation will actually be to the looser side than it is today. See, people get it mixed up. These are securities, which means we're operating off the 1933 and 1934, Securities Acts. You can't, no mistake there. I think that's the difference between betting on anything versus what we're doing. These are compliant securities and have to be so. When it comes to transparency, that's where the blockchain comes in. Right? It is great in proving who owns what, or what loans might be, or what insurance claims we're on, or what, how many investors are in the deal, and all of that. In fact, one of the pushbacks, Bronson, that I originally got, in fact, this was from a kind of a celebrity attorney that was out there, was, well, I talked to a lot of syndicators and they just don't want to share that information. They just don't want to, give away their secret sauce and stuff like that, or they don't want to. I get that, but that's not the future. Because if I'm an investor and I'm like, okay, this person, their deal's online, it's on chain in the marketplace, I can see everything, I see the blockchain, I see what's going on. This person says they have an Excel spreadsheet. Wait a minute. Why aren't you as transparent as this person. And I think our industry needs that. There's a lot of fraud. There's a lot of, I just think it's appropriate to be transparent and compliant, and the blockchain is what lays that in place and helps us do that.
Yeah, that's great. Awesome. Well, I really appreciate you, Tyler. Thanks for all you're creating. I just think there's so much value, and this has been a labor of love for you to really create all this. And once they're going, it's like, oh yeah, this is amazing. But like to actually do all the work takes a lot to be able to get there. So appreciate you showing up, being with us today. Look forward to seeing you at some upcoming events, and excited for you, man. Well done. And how can people reach out and follow what you're doing?
Yeah, absolutely. Well, I think if they're interested, we've got a free quick start guide to real estate tokenization. They can just go to RETokens.com and get that free download. So that's a great place to go as a website with education there. We also have a great YouTube site with educational information, which is at RETokens. And we do a lot of thought leadership regarding the space on our LinkedIn page. So I would definitely go follow that page. And if nothing else, you'll be popular at the cocktail parties.
That's awesome, man. Well, love it. Well, thanks so much, Tyler. Look forward to catching up soon, brother.
Yeah, sounds good. Appreciate you guys having me. Looking forward to the next conversation.
All right. Well, Nate, that was a great interview. I love Tyler's passion for this. And honestly, they've been talking about this for years, the tokenization of real estate, the tokenization of other things. And it became, for a while, just kind of this abstract thought, but they're actually doing it. They're actually doing it with businesses. They're doing it with real estate. We may actually look into some of our upcoming deals because it provides more liquidity for us, for investors, for everyone. And you can do a lot more with it. And so obviously it's going to be a different model than, hey, I've got to take, 50 investors at 100,000 to raise 5 million. It could be there's hundreds of investors and there's some service concerns there, but there's things you can do, and it's evolving and developing. And I think there's some really interesting implications of that. What was your take?
I mean, Tyler got me fired up. The two main things that stood out to me is, number one, tokenization opens the door to these kinds of investments for people that aren't accredited, that have been shut out forever. So really excited for that. But also, I mentioned that it cuts down on a lot of the waste that we've seen in real estate. We make we'll say a 20% annualized return, and we get 5% of that back just in the fact that we're flipping in 2.5 years when we could be holding the asset for 50 years. And so cutting down on waste, not having to flip the asset every 2 to 5 years, increased liquidity, increased access for people. I think also because of the increased liquidity, I think there'll be a lot more profit involved as well. So I am super fired up for this. I cannot wait for this to be a thing.
It's going to be fun, man. It's going to be fun. It's fun when you see some of the stuff like on the ground floor where you're like, oh, this new thing's happening and I'm right there. And again, there are people that are innovators. And I think I honestly say the biggest reward is when you're an early adopter, right? So you don't wait till like the first one that does something, but you're like, oh, this is actually something that's happening. Like people that got in and started using ChatGPT right away. It's like, well, you have many more skills now that you can use. And it's similar like this. It'll be a real opportunity, I think, in the beginning to get involved in something like that. So to our audience, thank you for being here. Thanks for taking the time. It really is very humbling and exciting to know that you guys are getting value from this. Every week we get emails and calls and just people reaching out like, hey, love what you're doing, love what you're creating, keep it up. And so we're really encouraged by that. If you haven't heard about our Wealth Forum event, it's basically an event we do every quarter. We're doing one coming up in December in Pasadena at a luxury hotel. A lot of high-end investors, a lot of high net worth investors are going to be there, and it's going to be wonderful. So if you're interested in that, please shoot me an email at Bronson Equity. Can give you some details on that. But really glad that you're here, Nate. Thanks for being here as well. Look forward to seeing everybody on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.